How do I finance a flip? If you are asking yourself how to finance a house flip, you are not alone. Many beginners in real estate investing wonder about their options. Let's break down the various ways you can secure funding for your flipping project. First up is traditional bank financing. This typically involves getting a mortgage or a fix and flip loan from a bank. To qualify, you usually need good credit and a history of successful flips. Banks often requiring a down payment, which can be a barrier for newcomers. Their strict lending criteria can make this option less accessible for those just starting out. Next, consider using a home equity loan or a home equity line of credit. These allow you to borrow against the equity in your existing home. This option can offer lower interest rates, but it comes with the risk of losing your primary residence if you cannot repay the loan. Another popular choice is hard money loans. These are short-term loans from private lenders or investor groups. Hard money loans focus on the after-repair value of the property rather than your credit score. While they provide quick access to funds, they often come with higher interest rates and shorter repayment terms. You might also think about borrowing from friends or family. This can be a great way to secure funding if you can agree on favorable terms. However, it is essential to have clear agreements in place to avoid any personal conflicts down the road. Seller financing is another option worth exploring. In this scenario, the seller acts as the lender, allowing you to buy the property with little or no upfront cash. This can be especially helpful when traditional financing is not available or takes too long. Crowdfunding platforms are gaining popularity as well. These allow multiple investors to pool their money to fund a flip. While this method opens up access to capital, it requires good project planning and compliance with regulations. Lease options or rent-to-own agreements can also be useful. These arrangements let you control a property with minimal initial investment by leasing it with an option to purchase later. This method requires careful negotiation and legal guidance. Other financing methods include personal loans, which may offer competitive rates but usually have lower maximum amounts. You can also consider borrowing from your retirement savings through a 401(k) loan, but be aware of the repayment rules and risks involved. In summary, financing a flip involves weighing your access to capital, the cost of funds, and the risks involved. Hard money loans and home equity lines are common among active flippers. Meanwhile, seller financing, crowdfunding, and lease options provide creative alternatives. Assess your financial situation and project timeline to choose the best financing strategy for your house flipping investment.